Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. We're going to be talking about the weekly bearish divergence that we see here on price and the RSI. Also, the August drawdown that we tend to see across time, but with specific focus on the pre-halving years, 18% in 2015 and minus 4.6% in 2019. And the reason we focus on that is because this is 2023, which is a candle 3-year in the 4-year cycle, so a pre-halving year. We're down minus 2.5%, so almost reaching that August 2019 drawdown. But if history repeats in terms of a 2015 sense, then minus 18% to around this region of 23k could occur. But the major things that I want to talk about are the developments in what's going on, and this video is going to be about those developments on the videos that I posted last week. So subscribe to the channel for more videos like this in the future, and let's dive right in. So we're seeing the RSI downtrend being respected. This is the primary downtrend that's resisting the RSI into a lower high and downtrend. This higher high is still weighing down on price, and the 29,250 level is acting as a resistance. And what's really interesting about this resistance is that we're seeing the same thing happen compared to late April, early May. We're seeing exactly the same thing happen. And not only that, the RSI, the primary downtrend, is very much still intact, but at the same time, we're seeing a new lower high resistance form on the RSI, weighing down on the RSI. So this is only mounting weakness on the RSI, two downtrends already forming, a multi-month downtrend and a multi-week downtrend also. And the next region that the RSI is going to drop into is probably around this 55 RSI level, where we've seen support retests over the past. And this is where price is probably going to be downtrending an additional amount until the RSI drops into this region. So that's the support to watch out for. And this is just a chart just showcasing to us how upside wicks into 30k while still weekly closing below this level, that's what contributes to this region just acting as a resistance. We've seen many upside wicks into that resistance, which only adds further fuel to the fire of an idea for this being a double top formation. This 29,250 level really acting as a resistance, upside wicks trapping FOMO buyers just like in late April, early May. And we're seeing downside wicks in these recent weekly candles, but not at the moment in this weekly candle. And if we see a weekly close below this support around 29k, then we're going to see this candle be a fully fledged candle body candle. So essentially showcasing stronger sell side interest and pressure compared to what we saw here. At the moment, this candle is very similar to this one, so additional downside wouldn't be out of the question, especially since flipping 29,250 into a resistance has preceded further downside in the past. So if we see this double top really play out just like we saw back here, then dropping into 25k is very much on the cards, even with some scope for some sort of downside wicking like we saw back in June, roughly speaking, this sort of downside wicking. This is going to be the validation point for the double top, and that's something that's going to be really important to watch out for. And it's not really far-fetched, because a double top from current levels, that test of the double top base essentially, to complete this double top, we need to see an additional 9 to 13% drawdown, and that's totally standard, totally doable in crypto markets. We've seen essentially in more volatile conditions that a minus 10% move towards the upside or downside, that's really the bread and butter for crypto. So a drop of 9% is very much within normal bounds, but that's where we drop into the 26k region for a retest and to just challenge for a potential breakdown. 13%, a 13% drop is around here actually, so into the wicking region. So in case this level here gives way and we see a bit of downside wicking just to really capitulate a lot of the panic sellers, but ultimately reverse, then that would be a bull trap, or at least a bear trap. So we're still seeing a lot of declining volume since this peak right over here. So this is occurring at declining volume, so not much volume coming into the market, while still Bitcoin's price action is in a downtrend and flipping old supports into new resistances. So those are bearish signs. But that's very different to what we saw with this top, for instance. This top is where we saw inclining volume. So inclining volume showcasing that the bulls were not able to press price to new highs, even though we had a strong seller, or at least buyer candle, a buyer candle that was really strong on inclining volume, showcasing that we weren't able to press to higher highs beyond the 30k region on much higher volume than compared to here. So that just shows that the bulls were lacking strength, running out of that pressure to push price to new yearly highs. And right over here, we're seeing a different story, but still implying weakness. Not so much weakness in being able to press prices to higher levels, but just that there isn't much interest coming into the market as prices dwindling. Buyers are not stepping in at this point in time. And in fact, the RSI is showcasing to us with its new dotted downtrend here, aside from the primary one, which was already evidencing weakness, this new downtrend here is just showcasing the same thing, that buyers are not ready yet to step in and that the volume isn't coming in. People aren't willing to buy in just yet, just waiting to see how things play out. And at the moment, this candle could be very similar to this candle, especially since it's below 29,250. But in the candle body shape itself, very similar. At the moment, it does look like we could see a completion of this double top. But to invalidate this region, essentially, is to reclaim 29,250 as a support. And for one of these downtrends, ideally the RSI to break out and see the RSI get breached on this downtrend, that's something that would invalidate this weekly bearish divergence that we're seeing here, and in the same time distort this double top, this M-shaped bearish formation, because by flicking up and reclaiming this level, by flicking up and breaking this downtrend, that would essentially distort the second part of this double top formation. What we're essentially watching for is a downtrending channel to form here, and we're seeing that at the moment be the case, although in early stages, definitely. But if we were to see this sort of downtrending channel, then we're at the moment not really seeing much of a channel here. However, lower highs are persisting here and rejecting price nonetheless. So what I'm going to be watching for going forward in the short term is how will the RSI react to this historical support right over here, and where will Bitcoin's price action be at that point in time, because the RSI can give us a lot of indication into where a reversal might occur. So if the RSI holds this support and price drops, for instance, to this level right over here, then we'll have confluence for some sort of at least bounce occurring. But generally, the trend is down for the time being. The bearish divergence still very much intact, still playing out, and it's this bearish divergence and declining volume and price positioning relative to 29,250. These are all signs of bearish confluence, potentially suggesting that we're going to complete this double top over the coming weeks. At the moment, no signs of this double top being invalidated, and no signs of this weekly bearish divergence being invalidated either. So this bearish confluence and these bearish signs are all feeding into that potential possibility of a double top forming here for Bitcoin. In any case, that's about it for today's video. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like the video if you enjoyed this and would like to see more content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.